Good evening, guys. Thank you for joining in for today's Smartkarma forum. As is customary, I tend to give 30 seconds to people to stream in. And while we're doing that, we can take a quick recap of some of the ideas that were discussed in our most recent forums. So last week, for those of you who did not join us, we took a close look at First REIT. This is a healthcare REIT listed in Singapore that is down 83% from its previous highs. There's a special situation that's taking place with the REIT and the broader Lipo group. And that was sort of the key feature. In the days right after this forum, actually, the local newspaper here in Singapore, Straits Times, did a very big feature on the Lipo group as well. So it's clearly a name that's in focus. We also had one of our analysts, David Blennerhassett, join us to discuss virtual IPOs and SPACs. And the third topic we discussed was inflation. And if you really just even look at the major newspaper headlines of the last week or so, everyone is talking about inflation coming back. So, we really are a couple of steps ahead of the market there. In the week before, we took a look at CPMC. This is China's largest packaging company, and they package anything from Coca-Cola cans all the way to beans and many other products, right? Metal cans, tin cans, aluminum cans of various sorts. And there's, again, a very, very interesting angle at CPMC. It's an extremely cheap stock, and it's starting to break out. We looked at China property management and Chinese banks. So like this, every week, we tend to look at one small or mid-sized company, one large company, and one thematic. That's the sort of consistent pattern. We look at all these names very, very carefully. We track how they've performed. We try and keep everyone sort of very accountable and focused. So as an example, let me make this a tiny bit bigger. So one of my colleagues put this together. These are all the ideas that we looked at in December before we broke for Christmas. And here you can see what was the share price when we kind of delved deeper into the idea. This is the current share price. These are obviously in different currencies, but you can see this is the sort of return across these ideas. And on average, if you look at these ideas, it was about 24% return. So like this, maybe on a quarterly basis, we will look back and we will see, how did ideas from 3 to 4 months ago perform? What worked, what didn't work? We might even do some retrospective sessions in some of the weekly forums. So with that, I think I'm ready to kick off. And today is reunion night in Singapore in Southeast Asia. Which is a day when we get together with families to celebrate Chinese New Year or the eve of Chinese New Year. So this will be a very short and sweet forum, probably 15, 20 minutes. A few key points to note before we kick off. First of all, this is strictly for subscribers, you know that. Secondly, it's for informational purposes. Do not take this as investment advice. This is the opinion, the collective opinion of the research providers that we have on Smartkarma and not of the platform itself. And lastly, but quite importantly, Chatham House rules apply, which means we would not like if you shared any of this content on social media or any other public forum without prior permission from us. So with that in mind, let's kick things off. We've got 3 things on the agenda today. First, we will look at a hidden mega bank in Japan. This would actually be Japan's 4th mega bank. The second idea we're going to look at is Alibaba and the sort of return of Baba. And the third theme that we're going to look at today is the next batch of Chinese IPOs that we expect to move from the US back into the Hong Kong market. So we're going to take a quick look at that as well. So let's kick things off. Just one final point. You can ask me questions at any point of time. For this, you can use the Q&A button on your Zoom application. You can also send me a chat message. I'm very relaxed. This is an open mic. I might not know all the answers, but it's fun nonetheless. Okay, let's kick things off. So Japan's 4th hidden mega bank is SBI Holdings. The The ticker is 8473 Hong Kong. Just a quick look. First of all, the chart, as you can see, this is breaking out. I think the stock was up about 5.6% today. This is not an expensive stock. You know, it's 11 times PE, just over book value. It trades 68 million US dollars a day. So it's, you know, very liquid, and it's a $6.7 billion market cap, which is why we're sort of calling it a mid cap here. We do cover Japanese banks very, very closely. The key analyst who looks at this space for us is Brian Waterhouse. Just a quick look at who Brian is. So Brian has been covering Japanese financials since 1976. That's a very, very big number and a very long career looking at this space. He used to work for CLSA, Japan Invest, many other such firms. So he's definitely seen the cycles for the financials, you know, the hunky-dory days leading up to the peak in the 80s and all the way since. Let's look at that. So first of all, SBI was established in 1999 as a subsidiary of SoftBank. You know, some people do not realize that, but you know, the SBI is SoftBank in that. The firm actually went independent in 2006 again under Yoshitaka Kitao-san. He was one of the presidents within SBI, and his parentage is from Nomura. He was a Nomura investment banker. What he's done since 2006, and mind you, it's not that many years, but he has built a vast and impressive internet-based financial services company. Now, look, this is extremely important because I think one of the most interesting things about SBI is that it's a fintech, but nobody realizes that it's a fintech. But right from day one, Yoshitaka-san wanted to build a company that is, you know, where the unique selling point is technology. So what was his mission? His mission was to build Japan's fourth mega bank. Now, there are three mega banks in Japan: MUFG, SMFG, and MFG, right? These are all, you know, mega cap companies, and Yoshitaka-san wanted to build the fourth company, which is of a similar size. So let's look at MUFG briefly, right, to get a quick sense of how big these companies are. Okay, this 8306. So MUFG is a $63 billion market cap company. And just now we saw that SBI is $6 billion. So he's really trying to become at least 10 times bigger than what he is today. How is he doing that? He is buying up equity stakes in at least 10 regional banks. He's already at 7. So about 6 months ago, he was sitting at 5. And then he took a stake in this company called Gmoto Holdings, which added 2 more banks to his empire. Now he's sitting on 7, and he's just 3 away from his target of 10. And what he does is when he buys these banks out, he still uses their branch network and, you know, their customer base. But behind the scenes, he just kills the entire service stack and makes a unified shared service stack, which is built on technology. And SBI is one of the biggest users of blockchain in Japan, if not the world. He has also built something called the robotic process automation system. This is basically automating pretty much every back office function that you can imagine in a typical bank. So these banks, once they are absorbed into SBI Holdings, end up becoming way more profitable than they could have ever been. Now, why did we pick this particular idea to feature today? It's because this fits squarely into the Suga-san policy agenda at the moment. Who's Suga-san? He's the new leader of Japan ever since Abe stepped down. And Suga-san has 2 big things on his agenda. The first is he wants a consolidation of the banking sector. He thinks there are too many small and weak regional banks, and that exposes Japan to systemic risk. He wants to get rid of that. Hence, you need a national champion that consolidates. Voila, SBI Holdings. The second big agenda that Suga-san has is digitalization. He wants big caps in Japan to heavily pursue technology. Once again, SBI is the leader. And I think it's for this reason that SBI is starting to break out. I think in some of our previous sessions, we've already explained why financials are a must own in the market environment they're in. And within financials, we explained the special place for Japanese financials. And now within Japanese financials, we are bringing to you SBI Holdings as sort of a probably the best positioned thematic holding. So that's the first idea today. Again, please bring forth any questions. Of course, I myself am not an expert in Japanese financials, but I will refer you back to the platform or to Brian Waterhouse, and you can certainly ask questions directly too. While you're thinking, I'm going to move on to the second idea. This is Alibaba. Now, this is, I guess, large cap would probably not be giving it due credit. This is a mega cap. You know, this is a $720 billion market cap company. It is very, very well covered. You know, Mitchell Kim is just one of the analysts that covers Baba on the platform. But we definitely cover Baba from a slightly different perspective to the rest of the street. But there is a unique thesis at the moment in Baba, and that's what I'm going to talk about right now. Okay. First of all, I would like you to look at this chart on the right-hand side. The line in pink is Tencent, and the line in blue is Baba. As you can see, for most of 2020, Baba outperformed Tencent. Again, for, you know, there were just many periods of time in the last 2 years when Baba has outperformed Tencent. But in the last 6 odd months, the opposite has happened. Baba has really underperformed Tencent. In fact, this is a 54% performance difference if measured from the start of 2020. That is massive. Now, what makes this even more stark is that the reasons why Baba dropped, a lot of them had to do with anti-monopoly regulation in China. Both companies are equally exposed to these risks, yet Tencent has outperformed. The other reason, of course, was the Ant Financial IPO was pulled at the last minute in November. Let's take a closer look at that very slowly. But in the aftermath of the Ant Financial IPO being pulled, I think journalists went apeshit about Baba. You know, we had all sorts of rumors. Jack Ma has gone missing, and this has happened, and that's happened. All in, what happened is $260 billion of market cap got destroyed here. And in sort of the opinion of the analysts on our platform, the pendulum swung way too much. People went from like loving Baba way too much to then hating Baba way too much. Meanwhile, last week, we've just had results for Baba, you know, the sort of fourth quarter numbers. And to be honest, the numbers look pretty interesting. They showed the historic highest quarterly revenue growth, that was 37% year on year. They showed the historic highest, sorry, just give me 1 second, highest core commerce EBITDA. Core commerce is basically their, e-commerce business, apologies. They also demonstrated the highest quarterly operating profit. Then a lot of their big business, new businesses turned profitable. So the cloud computing business turned profitable. And I think some of you will remember what happened to Amazon when AWS turned profitable. Also, Kainio, which is their logistics business, also showed positive operating cash flow. Not only that, but news came out that Ant Financial is back on track. Some reorg is planned. You know, that might diminish the profitability of the business to a certain extent, but at least it will be a going concern. And you know, all the rumor mill about Jack Ma having disappeared calmed down. You know, news came out he was only playing golf in the US, and that's why he was not in China. And the sum total of all of that is that you can now buy Baba at 4-year valuation lows and at a level where they have $52 billion of net cash on their balance sheet, which does not include the $5 billion in bond money that they just raised. So extremely strong balance sheet. I mean, you can't get these sorts of numbers in a company this size anywhere. Now, let's go further. So William Milan, who is a very, very experienced TMT analyst, he's actually based in South Africa, covering TMT space globally. He used to be on the buy side for more than a decade. He has just published a sum of the parts valuation for Baba. Now, what's sum of the parts? Basically, you take each individual business of Alibaba, find the fair value for it, and add it all up to find out what's the fair value for the whole company. And you've got to do that for businesses of the size of Baba, right? So he's just presented this. Mind you, the street is still not really updating their numbers, right? Some of these guys want to get back on the Ant Financial ticket, others, I don't know what's going on. But it was great to see William's analysis. What he's shown here is that the fair value, if you look at the Hong Kong line, is about 329 Hong Kong dollars versus the current share price. This is a few days old now, of 253. So that's 30% upside. Now, let me contextualize this for you. If Baba goes up 30%, it'll be just shy of $1 trillion in market cap. And I think, and we know there's like less than 10 companies in the world that have hit the $1 trillion status, right? So there's something to be looked at very, very, very carefully here, right? And I think the big takeaway from William's work was that if you look at the current share price, subtract everything out and work backwards to figure out what is the street valuing Ant Financial, their 33% stake in Ant at is basically negative $113 billion, which is a bit sort of silly here. So no matter which way we look at it, Baba looks extremely interesting. The correlations to Tencent have really broken down. These things are usually not sustainable. There's a value argument here. There's clearly a growth argument too. How many businesses that are $700 billion in size are still growing over 30% year on year? Well, not many, right? So it feels that the peak of pessimism for Baba is behind us. And sort of that was the crux of the idea here. I'm also going to open up a little poll just to see what you guys think about Baba. So you will, if you have dialed in using your desktop or your mobiles, you will see a little poll on Baba. Cool. And of course, for those of you who like to have hedged positions in your books, you can certainly also, set up a hedge position versus a tech index or MSCI China. But this is a very, very easy name to hedge. One final thing that I will mention here is that Baba has a US listing and Baba also has a Hong Kong listing. We have a ton of analysis on the platform that supports owning the Hong Kong line and not the US line. This is linked to some changes in index composition that are going to be announced that will mean that the Hong Kong line starts to lead the US line, and you want to stick with the leader here. Finally, I will show you something quite interesting. If you look up any stock on our platform and you go into analytics, I think you've seen, you can see financials of the company, you can see lots of metrics, but there's a very cool metric called sentiment, where you can track the sentiment of the analysts on the platform. So as you can see that in November, even though we were looking at the Ant Financial IPO, there were a number of analyst reports on our platform that went negative, much higher than in the previous months. But now if you look at Feb, there's two interesting things. First of all, I mean, it's still early days in Feb, but we're from a sort of sentiment bull to bear ratio perspective, we're leaning more and more positive. But the other chart here, corresponding chart, is interest level. Interest level tells us the aggregate interest from other platform users. This tends to be a contrarian indicator. When a lot of people are looking at something, it's crowded, either on the long side or short side. But when interest levels fall, it's usually the best time to be spending more time doing your research. So, I think those are some very interesting data indicators from the platform to be looking at from time to time also. Cool. I do have some questions coming in. Let me take a quick look. Okay, so two quick questions here. So the first question is, one is, how far the share buyback has gone and whether the buyback has caused a recent recovery. Now, I'm not sure exactly how far the buyback has gone, but the Alibaba buyback was not that big in the grand scheme of things. I can see if we can find out information about it quickly here. So just a quick reminder, I think in November, after things dropped a lot, they announced big buybacks. But from my memory, it was about $10 billion, which is not that big. And this thing trades. Let's go back and see how much Baba trades. So the Hong Kong line, I mean, this thing trades over $1 billion in a single day. So my guess here is that it's not really the buyback that has caused the recent recovery, but we've on the platform, for example, on the 14th of January, we were talking about peak of pessimism potentially being behind us. Don't forget, in January, people were worrying that American investors will not be able to buy Baba, which was just yet another rumor that was going on. So I will look up the details on the buyback. I do not know it off the top of the head, and we will post it in one of the discussions. Thank you for that question. The other question is, many shares trade at a discount to SOTP. How useful is this? Well, the purpose of the SOTP is to tell you what is being priced today. Alibaba or Tencent for that matter, they are not treated as conglomerates because there's a lot of synergy between the businesses that they invest in. For example, Cainiao, which is logistics, is very synergistic to the e-commerce business. So you look at in these cases, in companies like Baba or Tencent or Amazon, you look at SOTP just to get a sense of what's in the price, but you don't really treat the company as a conglomerate the way you would trade, a Swire, Now, so in this case, there's two other things to note, right? One is that their investments, they're being marked at book value, and you have to see whether their realized value of these companies is going to be much, much higher than book or not, or is the book value under or overstated. That's part of the work that William has done in his analysis. The other thing you look at is, you work backwards from the current price to determine, how bad could things be with Ant Group. Now, clearly, a negative $113 billion valuation is a bit sort of excessive, right? And also you can potentially do another analysis, which is historically what sort of discount or premium to SOTP has Baba traded at. But the last thing I'll also say is, look, sum of the parts is just one way to value a company like Baba, right? The other way is much more standard metrics, right? Growthy metrics like PE or price to sales or PEG ratio. And when we look at those sorts of valuation metrics, let's look at the US line because the Hong Kong line is much newer. I think this is pretty interesting. So, okay. Look, on EV EBITDA, this is the lowest it's been in a long time. PE, it's coming back to about 4-year lows. Similar thing with price to book. In fact, it's definitely well past 4-year lows. Price to sales, I mean, God, this is the lowest price to sales it's ever been, So a lot of these other metrics are also telling you that relative to its own history, this thing is looking cheap. But when we look at things like growth, your revenue growth hasn't really slowed down that much. Profit growth is actually accelerating. We just talked about that as well. And the balance sheet is looking fantastic too. So, you have to put all of these things into context. But thank you for that question. Let me move on to the third and final thing for today, which is about China ADR secondary listings. So as you know, a big theme over the last year and a half had been some of the big Chinese companies that were only listed in the US doing secondary listings in Hong Kong. And Smartkarma was really talking about this theme. We did a lot of work here. We spoke about Hong Kong Exchange as a core beneficiary. We looked at the valuation arbitrage that existed and so forth. So now, as we go further, we should take a look at the next batch of companies. So Sumit Singh, who let's take a quick look at who this analyst is. So Sumit's been one of the earliest analysts at sort of Smartkarma on the platform. He is the head of research at Aquitas Research. It's an independent research firm that specializes only in IPOs and placements. Again, this is not something that you would ever find in your typical bank or broker research. But his company, Aquitas, just analyzes IPOs, and that's quite fascinating. So last year we saw, a lot of these things happen, right? A lot of these IPOs come to Hong Kong. And in his recent insight here, he's taken a closer look at what next, what's the next batch of companies to come. So first of all, the one key thing to note is basically there are 3 years left for a whole load of companies that are currently listed in the US to come back to Hong Kong. Last year, only 9 did, and there's a lot more. So the deal flow is not going to slow down. It's going to be still very, very, very big. So what they've done is they've shortlisted these 29 names. And there are, for some of these names, there's interesting valuation arbitrage now. The Hong Kong or the Chinese valuations are much higher than the valuations that these companies are now getting in the US market. Look how the pendulum has swung, right? So I think a lot of these companies are going to try and capture that upside through the listings and also to comply with the new US regulations, right? So this is the short list. This is all in Sumit's recent insight, which is titled China IPOs Secondary Listings Pipeline. So do take a look at this, guys. But what we have noticed is that as you approach the secondary listing timeline, these stocks tend to do quite well into those listings. That's it from my side today. Any questions or feedback would be appreciated. You can either sort of ask a question now, but if you guys want to run off and enjoy your reunion dinners, that's great too. You can always post discussions on the platform or directly to me. It's really, really fun to keep this two-way and engaging. And I know some of you have started building that dialogue with the platform and the analysts, and I appreciate that. By the way, I will quickly tell you the results of the poll. So 82% of the attendees today have said that they would own BABA here. And the balance 18% have, of course, said no. So that's the verdict of the audience that's dialed in today. But thank you very much for your time. I hope you enjoy the forum. Your feedback is appreciated, and I hope to see you again next week. Thank you. Bye-bye.